separates the great investor from the rest is the ability to see clearly when others are seeing the stars. Our next speaker has built a career on exactly that skill. With 30 years of navigating every cycle this market has thrown at him, there is no one better placed to give us that honest perspective. Please welcome back on stage Mr. Anuj Puri, Chairman and Founder, ANAROCK.
Thank you very much. What a good session we had. That could have gone on for another half an hour, but we also want to make sure is that if we need to invest, where is the money coming in from? Because many of the hotelier owners in this room make money from this sector and use the money from the real estate to put into hospitality. So what you're going to see over the next 12, 15 minutes is really what's happening within the Indian real estate sector. Clearly I was a lot more positive. The last time that I stood up here in 2025, I'm a little bit more cautious, this morning than last time. Over the last 12 months, there have been things that have changed on the sector in some of the asset classes. And certainly, Mr. Kachuru, in your area, in your region, there has been a lot of changes in North. So let me just begin with very quickly. Its contribution is going to be $1 trillion as the economy moves to $7 trillion by 2030. Let me just deep into commercial leasing. Best ever year 2025 since independence of India. Best ever year. Phenomenal the way we've seen the growth. 80 million square feet of gross leasing, 58 million square feet of net leasing. This is important because that means there is a lot of job creation that is happening. These are the cities. Clearly Bangalore continues to lead. Vineet, your city continues to lead and doing exceptionally well, followed by NCR and then the rest of these cities. Interesting, a lot of people ask is what is going to happen with this AI, tech, etc. If you look at it, this is a very important slide. Clearly, the way we were doing outsourcing of tech in 2019 to 2025 has come down from 42%, it has come down to 27%. The rest of what you are seeing is banking, financial services, consulting, manufacturing and industrial. We work a lot with one of the German car manufacturers. All their new car designs are happening in Whitefield. 2,800 automobile engineers sitting in there. And Ashank, you'll have a lot of this data. Pharmaceutical companies, thousands of doctors that they are employing is, the big four, the thousands of chartered accountants that they are employing in. So it's not necessarily tech. We think is that this entire outsourcing is just on the basis of the tech. This is actually on the basis of the GCCs, the global capability centers that are coming into India. Retail, just like the office is a bad word in the Western world, retail is also a bad word in the Western world. But look at it in India. A lot of these digital retailers are wanting physical space. So clearly, last year, 7.5 million square feet new retail leasing that was done. What came into development was 5.2 million. 2024, again, the leasing has been way ahead of where the supply is. This is an interesting slide that I asked our research team to put together because a lot of people feel is that vacancy in malls is very high. I said split it into grade A mall, grade B mall, grade C mall. Look at it, grade A mall, single-digit percentage vacancy. In fact, many of these malls where we do leasing, we have 4 retailers waiting outside the shop that if it was to get vacated, we want to go in there. And this is largely the digital brands who want physical spaces as well. So it is phygital now. Those two sectors were only 16% of the Indian real estate. 84% of the real estate is this sector, and that is where I'm a lot more cautionary now than what I was 12 months ago. Whilst the values of sales have gone up, the volume has started to decline. 14% lower number of units sold in 2025 in comparison to 2024. 14% decline already started to show. Yet, 6% increase in the value in lakh crores, if you were to look at it. What's happening is per square foot price of these apartments is going up. Size of the apartment is going up, as a result of which the affordability is getting breached. And that is where we have seen this sharp decline of 14% in the sales in 2025 compared to 2024. A sad slide. I didn't want to put it up, but I said is let us put it up. We're saying is that we want inclusive growth. Actually, it is not inclusive growth. In 2018, 40% of the sales of the supply was from affordable housing. That has come down to 14%. From 40%, it has gone to 14%, which means rich have become richer. Look at the luxury and premium. From 4 and 5%, it has gone to 20 and 24%. Poor have become poorer because the ability for them to buy any affordable housing is just not there. This is the price rise that has happened. Look at it, from 2015 to 2020, overall in that 6-year period, the price rise was only 3%. 3% in 6 years, the price rise. And then there was a 54% price rise that happened during that COVID period and after COVID. And last year, we have started to see balanced and sustained growth at about 7-8%. So this is what has caused the per square foot price to go up. I mean, clearly within that period of time, there has been a sharp increase in the price. We don't normally show this slide, but for our conference, we put it together. A lot of people ask me, can you give a breakup of the 6 lakh crore sales that was done city-wise? These are the new homes that are sold city-wise. This is what it is. So Mumbai is 35% of the Indian real estate market in value. If you add Mumbai and NCR, we are nearly 60% of the overall. The rest of India is only 40%. 60% of the value for the developers on resi sale comes in from these two markets. This is the number of months of overhang in inventory. You had come down to 14 months, have started to climb to now 17 months. 18 months is the equilibrium. So we're still in the right position. If the prices start to rectify, if the apartment sizes start to get smaller, we'll still come back. Otherwise, the unsold inventory is starting to rise. This is how the size of the apartment went up from 2019 to 2025. Look at it, nearly 45% increase in the size of the apartment. Now, 45% increase in the size of the apartment, plus nearly 65% increase in the price per square foot. I mean, that is really what is creating this trouble in the ticket price. The affordability is ticket price. I mean, as a buyer, I've got 2, 3, 4 crores, in my pocket. That is what I can buy it. It doesn't matter to me if you shrink the apartment a little bit. The land sales continue to remain very high. So it is a contradictory statement. On one side, we are starting to see the decline in the resi sales. On the other side, we are starting to see is very aggressive growth in the land buying. We are seeing a huge amount of sales being done by the listed resi developers. We're starting to see city-wise, if you look at it, the contribution by the listed and grade A developers. A large part of the sales is coming from listed and grade A developers. Overall, on an average, before COVID, they used to be 17% of the overall sales. Today, they are 45% of the overall sales. So what is happening is, whilst the market is starting to decline, but these listed and grade A developers are eating somebody else's lunch. Grade B developers' lunch, grade C developers' lunch. As a result of it, they are demonstrating growth. So when you will see the listed developers' growth in sales, you'll see they are growing. Yet Anuj is saying is that the market is declining because they are eating somebody else's lunch, because the consumer, the buyer, has become very discerning and doesn't really want to buy under construction from a grade B or a grade C developer. Look at the growth that they had announced at the beginning of the year, the second last column, and they've been able to largely achieve those numbers. I mean, Prestige, look at it, 68% growth, they said, is from the financial year 25 to financial year 26 we will do. In 1 year, 68% growth, and they are in the 9-month period, they're already at 81% of their targets. Another reason why these listed guys are doing very well, look at the debt to equity ratio, 0.55, 0.55. It has come down to 0.05. So they have a lot of ability. If the market was to slow down, the grade 2, grade 3 developer is the one who's now going to start exiting. Grade 1 will continue to do very well. I met up with some Japanese investors yesterday, and I showed this slide, and they said, 0.55 is fantastic. I said, what do you mean fantastic? I said, in Japan, what is the net debt to equity ratio? They said 10. I said 10. They said, because the money is free for us. So yes, it is 10. There is. And we are at 0.05 net debt to equity with these listed guys. Just private equity, what they are investing in, that is what you see in the first half of this financial year. Commercial still remains a big part of it. Hotels have started to come in. They were not there really in FY25. Now the private equity is starting to invest in that asset class. 2 slides I want to do is, very quickly, is this is another sector that is really flourishing at this moment in time, warehousing and industrial. Warehousing because of the e-commerce, industrial because China +1. Make in India, that is genuinely impacting. We are seeing a lot of the US manufacturers outsourcing their second facility, third facility to India. They're not closing down China, but they're saying is that our expansion in China is going to be limited. We want to expand in India, and it is becoming a sector as vibrant as office in terms of the amount of leasing. If you look at it in the first half of the calendar year 2025, we were 35 million square feet. We haven't totaled what the total will be for 2025, but my guess is that this will come up to about 70 million square feet, about the same where offices are. And one sector that I want to leave you with is this big, massive investment that is coming in is data centers, billions and billions of dollars that is going in there. I mean, our Honorable Finance Minister earlier this month announced that there will be tax-free holiday in data centers until 2047. I mean, Anurag, I have never heard that ever any government making. I mean, they normally give a tax holiday 5 years, 3 years. 2047, if you were to invest in a data center, no tax in there. And that is what we are starting to see is developers moving the asset class into this data centers. A lot of the private equity looking into it. Thank you very much. And Shalu, I hand it back to you. I'm absolutely on the dot, 0.09 seconds left. Thank you, guys.